And welcome to the Property Buyer and Sellers Podcast. Today brought to you live with the amazing Nicola NcKenzie of Dunham McCarthy, mortgage expert and advisor, much famous on the BBC. And she's here to talk to us about mortgages. I know the interest rate rise yesterday was a shock to some, but if you follow the media and if you follow us regularly, you'll know it's not that much of a shock that it's happened. But nonetheless, we need to know how it's impacted the mortgage market, what's going on. And Nicola's the expert on that side of things. So we're very pleased to welcome her back. Nicola, welcome.
Hello. Hi, Ken. How are you?
Hi. You're very well, thank you. Thanks for joining us today because we're getting a lot of questions on mortgages on a daily basis. And it really is, people are worried, they're scared. I'm meeting a lot of people who actually can't afford to pay their mortgage, for instance, or who need to know what options there are available to them. Some are deciding whether to buy, whether not to buy, what the rates are, why rates are going up. There's all sorts of questions coming out.
So many questions.
Yeah. So if I can start by saying, how are you finding, what are people asking you, and how is the market right now if people are looking to refinance? Because that's the thing that's coming up a lot is refinance. Everybody's scared about their rates going on to the dreaded standard variable, and they're very scared.
No, absolutely. So definitely, we are seeing more people come to us for refinancing advice from externally, if you like. So obviously people that we've already done mortgages for, naturally we would help them refinance, but we are getting a lot more inquiries from people that probably usually would have just automatically went back to their own bank.
Yeah.
They're now thinking, yes, actually, I do need to speak to a professional to find out exactly what my options are. So I think that's a positive thing. I do think that, what's happening at the moment, people are aware of the value of getting advice.
Yeah. People need independent advice. I think that's the key thing. And they need to know not just what their lender's got to offer, but where things are so tight, that quarter point or small difference between one lender and the other can make a huge difference to what people have got to find out of their pocket. Can you first of all give us some guidance, Nicola, on because this is what's happening in a lot of cases to us. We act for a lot of buy-to-let landlords. We manage hundreds of properties all across mostly London. And many of our landlords are seeing standard variable rates coming in as high as 8.5%. And they're not yet out of their fixed rate. So could you give us an idea of time frame, what they could do and when?
Yes, because that is so important, and it's still an area where there clearly isn't enough awareness out there, because we're still getting people come to us that, in my opinion, is a bit too late. So the ideal time to start looking at your options is 6 months before your product finishes. 6 months is the optimum time. And the reason for that, I want to explain why, because people think 6 months, that sounds too early. Why do I need to do that? Well, the reason that you should do that is because as a broker, so if somebody comes to us that already has a mortgage, we would always do one of two things. We would compare what your current lender can do versus the rest of the market. Okay. Now, let's say that there's a better deal with another lender. Then your application will take maybe a couple of weeks to get approved, but then the actual offer will stay valid for 6 months. So a couple of weeks, that means that the lender's going to issue the offer when you're in month 5.5, 5 months left to run on the product. That gives you enough time to complete on that new mortgage on the day that your current product expires. So that removes any need to go on the standard variable rate at all. And even a few weeks on the standard variable rate can be hundreds of pounds for some people. So
huge.
That's the example of going to another lender. Now, let's say that you are better off with your existing lender. We would always tell you that. But now, as part of the mortgage charter, you've got over 40 lenders that have agreed to allow people to product switch within 180 days, before their product expires. So again, with a lot of the lenders nowadays, you can, even if it works out better to stay with that lender, you can reserve a product up to 180 days in advance. But a couple of tips I'd give there, Ken, is don't just assume, never ever assume that the current lender is the right thing. How would you know that unless you've compared it to the rest of the market? You can't. So you need to do that check initially. And again, using a good broker to do that makes sense. But also, let's say, because a common question that I get asked is, okay, if I reserve a rate now 5 months in advance, what happens if rates go down? Because rates have actually, there's over 5 lenders in the last couple of weeks that have actually reduced their fixed rates. So it is a very real possibility that rates could go down, in which case, then with most lenders, you can switch to the cheaper option right up until the new product starts. So there's no disadvantages in most cases to look in 6 months in advance. And that's why I would recommend that.
Yeah, that's interesting. Now, there's been some talk about the mortgage charter.
Yes.
Has this helped people in this situation and people, generally borrowers that are struggling? Has there been any impact from it?
I don't, if I'm honest with you, Ken, I think the mortgage charter is a good thing. I can't knock anything that's designed to help people, right? And the fact that you can now because I always thought there's a few lenders that have allowed you to reserve a product up to 180 days in advance. But now the mortgage charter, you've got over 40 lenders, whereas before it was a small handful. I think that's a very, very positive change, okay? But part of the mortgage charter is that it allows borrowers to go on to interest only, or extend their mortgage term without any affordability checks. Now, that's great on the face of it in some ways, because that might help a few people. But I also feel like, is that just putting a pause on a problem that's actually still going to be there 6 months in advance? Because you have to revert back to your old terms and conditions within 6 months of doing that. So whilst it's there to help, but 6 months, is that long enough time to help someone that's genuinely struggling? Exactly. No. I don't think it is. So like I said, I can't knock it. Something's better than nothing. Yeah. But I'm not quite sure it's a real solution for a lot of people, is the reality.
It sounds like perhaps it's more of a soundbite from government to try and address what they know is a coming crisis.
Potentially, yeah. I think it's just a way for them to be seen to be doing something.
Yeah. Now, can we talk about interest rates? Because it's very confusing for people, Nicola. On the one hand, we have mortgage product rates in some cases coming down. On the other hand, we have the headline rate from the Bank of England going up.
Yes.
Now, this is very confusing for people because they hear the announcement and hear that the average person's mortgage is going up. And then they hear brokers like your good selves announcing that some lenders are reducing their rates. Could you put some clarity around that? Because I think that's quite confusing for people.
No, definitely. Even to brokers, it's confusing still. But yeah, no, absolutely. So what people have to understand is that the Bank of England base rate is not directly linked to fixed rate products. Okay, so often it is linked to, say, if you're on a tracker rate mortgage, a variable rate mortgage, a base rate increase. If you're on a tracker rate product, that is going to, in most cases, have a direct impact. So the base rate goes up by 0.25%. If you're on a tracker rate, you're probably going to see your payments go up by 0.25% straight away.
Or of course, a variable rate would be the same, right?
Yeah. Whereas fixed rate products, the Bank of England base rate is not directly linked to fixed rate products. Okay. So what's more closely linked to fixed rate products is something called swap rates. And swap rates, I'm going to keep this very nice and simple.
It can get quite complex.
Again, it is quite complicated. Yeah, exactly. So swap rates is essentially the rate that banks will pay for funding to enable them to offer fixed rate products to their customers, just keeping it very simple. Okay. Yeah. Now, swap rates are essentially what the markets predict will happen to interest rates in the future. Okay. So fixed rate products are largely based on swap rate as opposed to the Bank of England base rate. Now, swap rates, yes, the Bank of England base rate does influence swap rates, but other things will also influence how a bank decides to price their fixed rate products. So a bank will look at not just swap rates, but they'll look at their internal targets. They'll also be looking at what their competitors are doing. There's a lot of factors that will go into how a bank prices their fixed rate products. So what you've seen is this week, NatWest, Virgin Money, Halifax, I think it was, and then the week prior there were 2 or 3 other high street banks. They've cut their rates. Now, it wasn't a huge cut, don't get me wrong. It was a very small marginal cut, but still a cut is a cut, and I think it's putting some positivity, I guess, back into the market. And that's despite the fact that the Bank of England base rate has gone up. So what you have to understand is when the base rate goes up is that a lot of banks have already predicted that, and they have already priced that in to their products weeks before.
Yeah, I understand. So what we're talking about here is a best guess prediction of not where interest rates are, but where they might be from the money markets, maybe 1, 2, 3, or 5 years ahead, which is why they don't correlate exactly.
Exactly, Ken. Yeah. So when we're looking at, what we think products are going to be doing for our clients in the future, we're going to base that on swap rates as opposed to what the Bank of England base rate's doing.
Right. Okay. Next question. I visit a lot of people. We are a working class area on the outskirts of London. I visit a lot of people that are struggling with their loans right now, and they feel that their circumstances won't allow them to go to another lender, and they don't want to go through the whole rejection thing. So I suppose the question is two-part. Number one, I think I know the answer to this, but I'm going to ask it anyway. Should they approach their existing lender with regard to whether they're on a rate that is the most competitive? And number two, should they be speaking to someone like yourself anyway, even though their circumstances mean that financially on paper, things don't look great?
100%, you should still speak to a broker. And again, let me understand why, because there's probably people out there thinking you would say that, but there is a rationale behind it. Let's say that and again, so a lot of people assume because they've got a CCJ or because there's, things in their situation that they've seen, I don't know, a video on YouTube or heard through a friend, that this makes it more difficult to get a mortgage. They just make an assumption and jump to conclusions that I won't be able to refinance with another lender. Now, again, in the nicest way, and I don't mean this disrespectfully, but unless you are a mortgage expert and you've been doing this many years, you're not going to be in most cases in a position to assume whether you can or cannot get that finance, because there's lenders out there that are intermediary only. You wouldn't know what their criteria is unless you're a broker. There's so many options that are out there for people that it's always still worth checking categorically, can I refinance, before you make that decision. There's no harm in doing that. In many cases, to do that research, we wouldn't charge a client to do that. It's a case of, okay, once we've done that assessment, we might say it is better with your current lender, but at least then 100% and you can make an informed decision rather than making an assumption. I don't think people should make decisions based on assumptions. People should make decisions based on facts.
Absolutely. Very well said, and based on information, and they can only glean that from an expert like yourself. So that's very important, I think. Yeah. Just going back to people that are in that situation and they do then speak to someone like yourself, and it doesn't seem that there are any other options for them, because I do speak to people in that position as well, where they've already spoken to independent financial advisors and they say nothing we can do. We go back then to the existing lender. What are the existing lenders obliged to do to help if I'm struggling with my mortgage right now? What can it be interest only, for instance? Can they put me on their most competitive rate? Are there other options? Can we extend the term?
Absolutely. So you will always be able to switch to a more suitable product if there is one available. So when you're with a lender, even if your circumstances have worsened, what they can't do is just say you have to go on the standard variable rate. They have to still give you access to their current product range. So there's always going to be some options there for you. Okay. Now, how competitive those options are obviously depends on who the lender is, but you wouldn't be necessarily a prisoner to that product or to the standard variable rate. So that's something that's important to mention. Now, in terms of under the new mortgage charter, you would have the option to extend your mortgage term or temporarily switch it to interest only. But you have to then still go back to your original mortgage terms and conditions within 6 months of doing that. That's what the mortgage charter says. Now, with that said, if you were making that change without using the mortgage charter, that's fine. So a lender, for example, might still let you transfer to interest only permanently or extend your mortgage term permanently. But that then usually would come with affordability checks and other checks. But again, that's going to vary from lender to lender. So again, I wouldn't automatically make the assumption that I can't do these things. And in that scenario as well, Ken, I'm still going to point out, any good broker out there, like you've just said, you've got clients where they've spoken to a broker and they've been told we can't help you. Well, actually, that duty of care should still extend to helping that person, even if it's with their existing lender.
Yeah, they should be giving them the advice that you've just provided there, that actually there are options. And it's interesting to note that the existing lenders have to give you an option on their whole range, regardless of your new circumstances. I think that's really important, because I think a lot of people wouldn't be aware that they have that obligation.
Definitely. You're exactly right, Ken. And I've met, excuse me, a few people over the last few months that have just stayed on their standard variable rate because they don't quite know who to speak to or what to do, or again, they've made assumptions that they won't be able to have another product. There's so much, I suppose, misinformation out there and lack of awareness that I just think it's amazing that you do things like this podcast to make sure that people know these options, because I think it's just not there's not enough information out there, clearly,
Definitely
because if
not.
there was, there wouldn't be so many people still not getting the right advice that they deserve.
So can we talk about rates? Because as we've already mentioned, it's a little bit confusing. But if we wind back the clock 6 months of where you were, since then we've had consecutive rate rises and people have been very intimidated. And some people that were thinking of buying have chosen not to.
Yeah.
What happened to 2 and 5 year fixed rates over the last 6 months? Has it been a constant, or is it constantly changing up, down, or sideways? What's your experience?
It has been a bit of a weird one, to be honest, Ken. So start of the year, rates were increasing, and then we saw a slight reduction, went up again, and now, like I say, you've got a small handful of high street banks that are reducing rates. So it's not the majority of banks, but like I say, there's been, I think, about 6 or 7 that over the last couple of weeks have started to reduce. And that, as you rightly mentioned earlier on, is quite surprising for people, given that the base rate's gone up again. So it is a bit of an up and down scenario. But I think the one thing to come out of this is that, I think because things are so up and down, people are still holding on to the hope that they're going back to 1% and 2%.
Yeah,
that's not happening.
Not going to happen, is it?
No.
Yeah.
So
No.
I know that we're seeing this up and down scenario that we have seen since pretty much the start of the year, but the up and down hasn't really, but we're talking up and down within the parameters of 1% to 2% of a change, if that makes sense.
Yeah, it does.
So people need to understand that it's not going to go back down to 1%. It doesn't work like that. So when I say rates have come down over the last couple of weeks with a few lenders, we're talking very marginal changes in most cases.
Some almost insignificant. I noticed one the other day that was down 0.1%. And you think, well, actually, that's not significant for most borrowers.
That's what I mean. So it is going to do that, but I think that anyone that's holding out to the hope that it's going back to 1% and 2%, I don't think that you should be basing your future decisions on that, is what I mean.
Absolutely. No, entirely agree. In terms of first-time buyers, I take it you've seen probably a dip in the number of first-time buyers and buy-to-let investors entering the market.
Do you know, it's funny you say that, actually. We still get a similar amount of first-time buyer inquiries. The first-time buyer market, in our experience, again, it might be different for other brokers and for other people listening, but we've actually still seen a similar number of inquiries from first-time buyers. Now, yes, the buy-to-let market, that has cooled down. We are seeing less inquiries from people wanting to enter the buy-to-let market.
Yeah, we've certainly seen a swap over in that way as well, in that it's more likely to be your traditional buyer, your first-time buyer, than your investor. Apart from a few corporate clients that buy anyway, there are...
Yeah, irrespective of what the market's doing. Yeah, absolutely.
There's always the usual suspects that when something hits a certain sweet spot, they'll see the yield and they'll dive in. And we particularly find that on our auction side. We do auctions as well. So on that side of things, it's a different kind of experience as well.
Yeah, got you. But I think the first-time buyer market's quite interesting, because I certainly think after the mini budget September last year, first-time buyers were very frightened and scared, and understandably so. That really did shock the market, and it was something that we'd not seen for many years. So for first-time buyers, that was the first time that really they're hearing a lot of drama around interest rates, I guess you could say. But I do think now, 9 months, nearly a year ago, that mini budget was. Wow, how does time fly? That's crazy. But I think now, a year in, of all these headlines about mortgage rates, I think first-time buyers are just getting a bit fed up and starting to think, do you know what, I just need to buy a house.
Yeah. And let's face it, in the UK, the choices are you rent or you buy, and the rental prices right now have rocketed. And of course, I think the dream for most people in an ideal space is to buy, purely because the lack of security of tenure is just awful for renters. There they are settling with their families, and then all of a sudden, we're finding this a lot now, families are then all of a sudden served notice by their landlord that A, the rent is going up substantially, sometimes as much as 50%, or B, the landlord has to serve notice on them, because regardless of how much they put up the rent, it can't bridge the gap between the new mortgage payment and the rent, regardless, so it really is. I mean, we had one the other day, which really sort of surprised me. A landlord came in and said, I need to put my rent up by 600. And he brought in his mortgage statement, £600 a calendar month. And he brought in his mortgage statement just to show, and his mortgage has actually gone up by 800. So on the face of it, it looked like he was being greedy, but actually he was just still going backwards, but not quite as quickly. So there's a lot of struggles out there. And what we're finding, the way this manifests itself is that rates go up. Landlords then find that in many cases, especially the higher geared landlords, then when they look at the new rates, having got used to ultra low rates, and now finding that the mortgage doesn't get covered by the rent, and therefore the rent is increased and the pressure goes to the very poorest in society, and that's very sad. And it's causing a lot of problems.
That's it. And I do actually want to touch on that point you raised, Ken, about first-time buyers. One of the main questions is, should I buy a property now or should I not? Now, everyone's circumstances are very different, so I think each individual has to weigh that up for themselves. But ultimately, what I do find slightly I guess frustrating is that when people are looking at answering that question, they often dismiss exactly what you've just said, what's happening in the rental market. And actually, I saw a statistic: London rents have now hit the highest they've ever been on record. The average rent in London is £2,039 a month.
Sounds about right, Nicola. Yeah, certainly. You can't get much for the average 3-bedroom house in our area now, and we're on the outskirts of London, is over £2,000 per calendar month. 1-bedroom flats, if you can find them, are 1,000 plus. It's massive for individuals.
And so if that's now the average rent, and that's a record all-time high, again, when people are making that decision, do I buy or do I carry on renting? You can't fix your rent. Like you've just said, there's a landlord there that's had to put the rent up £600 a month. Well, there is an argument to say that if you do get a mortgage, you're undergoing an affordability assessment and you can fix your interest rate. There are even some products out there that let you fix your interest rate for the lifetime of the loan if you're really that worried.
It's a very good point, Nicola. And let's face it, you can't fix your rent for 5 years. No landlord's going to sign a 5-year agreement with you, are they?
Exactly. So I'm not necessarily saying that renting's all bad. Again, everyone's circumstances are different. If you're the sort of person that's moving quite frequently, maybe renting is better for you. It's going to vary for each individual. But my point is that I do think that certainly in the headlines, there's a lot of scaremongering in terms of, people just jump to conclusions that, the market looks very frightening. I'm just going to carry on renting. And I don't think that's the right decision for everybody.
No, I agree. And I think sometimes when everyone's looking the other way, the smart money is going in exactly the polar opposite direction. And you can find some better deals out there now, especially for first-time buyers. All of a sudden, the market's, a bit more malleable. You can get yourself a great deal. And in the end, we're talking about a 25-year, 30-year commitment, or even 35 these years, aren't we, commitment? So from that point of view, when you look at it in terms of where the market is now, where it might be 5-10 years from now, chances are that you've made a good decision if you're buying now. History tells us that. If you look at the
And if you're taking out a mortgage for 25 years, 10 years from now, you're almost halfway through.
Yeah, absolutely.
And again, I meet a lot of clients now that, for one reason or another, they've been clients for maybe 3 years, but still haven't managed to buy for whatever reason. It's not many of them, but there's some that are kind of lingering on. First it was COVID, then it was something else. And I'm like, well, look where we are now. You are going to be paying, 5-6%, when actually, if you'd have done it the first time around, when even then you were worried, but 3 years ago, it would have been easier.
Yeah. I think another really important point, Nicola, here in London, there is so little stock available. And to give you some idea of the severity of the problem, if we advertise a property here in Southwest 16 for rental for a day, a 1-bedroom flat, we will get 50 calls. We have to pull it down. We have to pull it down off the web because we've got too many. It can only rent to one. So then there's 49 people out there still without home. So it's not just from a rental perspective that whether rental is a little bit more expensive or a little bit cheaper is one thing, but the other side is, can you even find a place?
Wow. Okay. I didn't know the demand
Yeah.
was, or the competition was that strong.
Yeah. And of course, in some cases, that means that landlords will do less. So the quality of the property is lower
Because they
because
don't have to. Yeah.
they know it's gone anyway. They
Yeah.
know it's gone anyway. So, that new kitchen's not required, or the repaint's not required, or the new carpet's not required. So the quality's gone down a bit. The rents have gone up a lot. And the availability is the problem, because the other thing is existing tenants, wherever possible. What tends to happen is this: most landlords don't want to push the rent to the nth degree unless their mortgage situation means that they have to. To give you a typical example, you might have a landlord whose rent is 1,000 per calendar month last year. It now really should be 1,300 per calendar month if it were on the open market. But the landlord's aware he doesn't want a vacant property, even though he would get another £300 a month. Much better then for him to compromise and say, well, we'll put the rent to 1150, so the tenant has an advantage, we have an advantage, and everyone sits happy. And that's what tends to happen. And of course, where that's happening, those properties no longer free up because there are no other options out there. The tenants are well aware that if they come out of this property, the chances are they're paying more, A, and B, they probably couldn't find even if they looked, and that's the crazy thing at the moment. So it's almost like the buying option may be more attractive in some respects because there will be availability.
Yeah, absolutely. And the market, in terms of the competition that was driving the market maybe a year ago, a year and a half ago, where lots of people were bidding on the same property, was a very common thing then. That's not the case now. So you're exactly right, Ken.
Yeah. It's an interesting correlation. And the other thing that I find very interesting at the moment is if you look at the level of repossessions in the UK, it's still running very, very low, roughly about 1%. And that's interesting, isn't it? Because you would expect, wouldn't you, with the pressure of interest rates rising, that we'd be in a much worse position. Now, don't get me wrong, it will get worse.
I was going to say, I think time will tell on that one. I do think it's going to start to affect some people to the point where they just can't keep up with it anymore.
Yeah,
sadly.
There's no doubt. I think one of the good things to come out of the banking crisis 2007-9 was a tightening of criterion, which has now led to most people having some equity, and they were soak tested to a higher rate. So there's a chance that they can still stick in there.
Very true, which is probably part of the reason as well why those numbers are still quite low, because actually people are being stress tested properly in the first place in most cases.
That's right. And I'm finding a lot of people are struggling on in there because they've got equity. And the last thing they want to do is get repossessed when they've got equity. So they'll try and juggle around and find some way of staying where they are.
Exactly. I agree with you. A question I actually have for you, Ken, going back to what we were talking about the competition for buyers in terms of the purchase market. What generally is the attitude your side from buyers and sellers? How's that changed recently? I'm interested to know.
Yeah, the real big change this year has been the number of buyers and the number of sellers looking. So what we found is that the thing about us Brits is I always think we're very good at doing one thing when we're not sure, and that's nothing at all. We sit on our hands.
So true.
And people are frightened. So what I find is I visit many vendors every week, potential vendors looking to perhaps sell their properties, and they're just not sure about the market. And quite often they choose to stay put. And there are a number of reasons for choosing to stay put. But one of the big ones is just the anxiety around interest rates and what that means. So interestingly, what that leads to is no doubt the level of buyers out there has dropped off dramatically, but so too has the level of people selling. And this has had an underpinning effect on price. So in certain price ranges, there's so little available that when something comes up at a certain sweet spot, there's demand because there just isn't the supply of property there. So it's quite surprising. So it's not falling off a cliff as some would have you believe. These sensational headlines that, property available for 50% of its original value can be quite deceptive. And the other thing, and this is a big problem, is most estate agents in the UK right now will be struggling for one thing if they're selling houses, and that is stock. They don't have enough stock to sell. And if they're on the residential sales side, not the letting side, they will be struggling. So how do you get stock onto the market? Well, I wouldn't say it's a clever trick. I think it's a sneaky trick, is that when you do a valuation, you overvalue the property. And by overvaluing it, so what happens then is, let's say there's a house that's worth 500,000, and the average agent will go in at, let's say, 525 or 550 optimistically. Then some, I would call them dishonest agents or sneaky agents will go in at 600 or 650 even. I've had one recently that I valued at 650 6 months ago, and I saw it come to market at 750. And then over the last 6 months, I've seen it go 725, reduced to 700, reduced to 675. And then the client called me and said, right, Ken, we'd like to go with you now. We can see you were telling us the truth now then. And I said, well, that's great. Thank you. Really pleased to hear that. But here's the thing. It's no longer 650. If we'd have marketed it then, it would have been 650. You see? So that counterintuitive thing is that by putting your house on at the highest possible price, it can actually cost you money in the long run. And of course, nobody wants what nobody wants. So it becomes self-fueling. You have this kind of spiral of, oh, that property's still on the market. It's come down again. Buyers find that negative, that constant reduction of price. So, you know, it can be a real factor there. So, yeah, we're finding that very much competitive pricing is important. But if you pick your property at the right level, there are still buyers out there.
And as well, I think, I completely see where you're coming from with all of that. But also, I guess for sellers, even though you might get slightly less, but of course, if you're buying the next property, then that will also cost you less.
It's an argument that I often use, Nicola. Yeah, thank you for raising that. Really important point. Yeah, because often I find that people, especially in middle age, are making what I call a sideways move. So they're moving from a terraced house in London for £500,000, and they might be moving out to lovely Stafford, where you know, they're buying a detached house for a similar amount of money. So it's a sideways move. And I always say to them, think about it like you've got this pot of cash, okay, and it's locked up in a safe, and all you're doing is unscrewing the safe from that wall and putting it in the wall in Stafford. It's the same thing. So there's no reason why you shouldn't move. I always say, if you have enough equity to do it, then move for reasons that suit your family, not for reasons around the market, because the market will change every year. But your circumstances and opportunities will only come up once and when it suits you.
That's very true. So if you've outgrown your 3-bedroom house, you know, are you really going to continue living, you know, in a cramped space if that's the case, purely because you're worried about the market? Or do you need to just actually do what's best for your family?
Exactly. Yeah. And I think a lot of these sensational headlines come around from these sort of misleading numbers that come out of sites. So for instance, take that house that was on at 750, now at 650. You know, if you looked at that in percentage terms, you know, that drop would be what, 150,000. It's ridiculous. But the reality is it was never worth the price that was originally asked. So therefore, the dramatic headline is property dropped by a massive percentage. But the reality is quite different. It's probably dropped by 5%.
It's really sad that, because I have come across agents where that's happened to buyers, and it's so frustrating. And then what it does though is makes the buyer become stubborn to drop the price as well.
Yeah.
Because they've got it fixated in their head that it's worth that higher price.
That's right. Yeah, it can be very difficult for sellers to reconcile, and also very confusing. I never blame a seller for going for a higher figure, but I do try and shed some reality around it. The problem is that some people will be, to be frank, a little deluded on price as well. You know, for some reason, you know, people will think that their road is the best road in an area because they're used to it. They love their neighbours, and everybody's told them so. And the neighbours told them, and, you know, and it's very much kind of, you know, you can get yourself in a self-congratulatory mode if you're not careful.
100%, Ken. Because I mean, I've been in my own house now for over 8 years, but I remember when we were looking at it, there were a few we came across and we were like, no, the seller is having a laugh. And you could tell it's because they had this, you know, connection with the property. And it's like, well, we don't have that connection. So we're looking at it from a purely, is this worth it? And it's not.
What I often say to sellers when these high prices are quoted is, you've got to decathect. That means to detach yourself emotionally from what you're doing. So step out of that vendor role, put yourself in the role of the purchaser. Now, search on Rightmove, put your postcode in.
Yes, and see what your competitors are doing, and you'll know if your house is better or not. I can objectively look on Rightmove and I can tell you if other properties that are same price as my house I can objectively say I'd go for that one over mine. Do you know what I mean? And people do. I agree, need to do that.
And that's because you're able to detach yourself emotionally. I think that's an important skill in life, but it is very important in property too.
I 100% agree.
Because if you can step yourself into the first-time buyer's shoes or the second-time or whatever it is that your particular property will appeal to, and say, right, if I'm that buyer, what am I looking for? How does it compare? Oh, that one's detached. I'm only a semi. That's going to be a preference over mine. Then all of a sudden you get into the real world situation rather than taking an unscrupulous agent's word of, oh yeah, you know, we've got the right buyers because we've got offices here, there and everywhere. The reality is, and that's another myth, you know, we find that as an independent agent, we're frustrated by all the time, is you get the big corporates and we'll go in as the small independent in the local area and we'll give them the real facts. And an agent will say, oh, but we've got branches in Chelsea and therefore we'll get you a higher price. And I always say, well, okay, let's think this through. Buyer comes down from Chelsea, sees a property in Norbury. What do you think the next thing they do is? They're going to dial that postcode into Rightmove, see all my stock, which is cheaper than your house, and buy that instead. You know, so it doesn't work. The whole perception around go with an agent that's got this, you know, a branch in a better area really doesn't work. Better off going for an agent that's going to be proactive and, you know, the 3 Ps we call it: promotion, presentation, and price. Get the price right. That's really important in today's market. And the promotion has to be on Rightmove and Zoopla, you know, and the presentation, of course, and that comes down to making sure through hints, tips and tricks that we make the very best of it when it comes to the photography by using a professional and making sure that when people view it, it stands out as one that should be looked at amongst its competitors, which comes back to going down to that Rightmove look again and seeing what the competition is and how that's being presented.
Definitely. And actually expanding on that point that you raised about going on Rightmove and looking at your competitors, that also applies to people when they're looking for properties, because we get a surprising number of people that come to us and say, I'm going to negotiate on this property. And my first question is always, well, what research have you done to look at other properties in that area that are of a similar price? You know, negotiating, I think what I'm trying to say is that negotiating, for some buyers, they think that it's just something that should be done without actually researching, is the property well priced in the first place? So even if you're a buyer, you should still be going through that process you've just explained, Ken. Looking on Rightmove, what else are the other properties in that price range doing? And that will help you to determine if what you're about to buy is priced right anyway. Because actually, and I've seen this happen, people lose out on things because they just think that automatically buying a property has to come with a negotiation, and there's no rationale behind the negotiation. Like, I want 30 grand off, and I'm like, well, where's that figure come from? There's no research, there's no evidence to say why.
And the truth is, it comes down to that whole old human weakness. Everybody wants a deal, right? It's human nature. We all want a deal. But what a professional would do, and this is the contrast, is they would do what we call due diligence, wouldn't they? They would go out there and they'd look at the market as a whole. And one of the services that we offer for our vendor clients when they're selling through us, we also act as buying agents. So sometimes people approach us and say, I want to buy some properties for rent, or I want to buy a property in a certain area. And we'll then charge them as if we were selling for them a similar fee, and we'll carry out that service. And there are tools available. Yeah, a finder's fee. Yeah.
Do you do any renovations for them as well? Does that come as part of the service?
That doesn't come as part of the service, but we estimate those renovations and we have recommendations that we can provide for them. But one of the benefits of doing that is that when we then get our vendor clients on the market, we offer a service where we can give them an opinion on the place they're buying. We have some research tools outside of Rightmove that are a bit more of a deep dive into properties and areas. All we need is the door number and the postcode, and we can give an opinion on what we think, how it compares, and what's sold around it, and also gut feeling on where they should go in on price given the work that's needed. And we'll even go as far as negotiate the purchase of the new property for them if they feel more comfortable. And we find that sometimes agent to agent, we can have, it's not pistols at dawn anymore. It's not a fight for the price. We can have that conversation. Look, our client's good for this. Our buyer is strong. Can we talk money? We know it's on for X, but what's the vendor situation? And try and dig underneath a bit. And that's the other thing that's well worth buyers taking into account is, you know, what's the motivation of the seller? You know, one really good question to ask is, you know, have they had any offers? Are any offers, you know, it is a pushy question, but it's one to ask the agent. Have they had any offers? Are those offers beneath the asking price? Any good agent won't disclose to you what those numbers are, but will give you an indication. So, for instance, in some cases, because the market is tough, we might quote a price which is offers over.
Yeah.
And the reason for that is we might know that a property is perhaps not worth 550, but is more than 500. And
right, so yeah, so you'll pitch it lower and see where it goes.
Why will we do that? I'll tell you why we'll do that. Because if you go onto Rightmove and let's say, for instance, you put it on the market at 510, then there isn't a price range for that. So what that means is when you search and you look up to 500, it's invisible. So nobody's seeing it. Most likely buyer, someone who thinks they're spending 500 will go a little bit more.
Yeah.
And if they're looking up to 600, yes, it will drop in. But here's the thing. If you go low, high or high, low, it will never be on page one.
Ah, I like that. Clever.
Therefore, the idea of offers over, which I know frustrates buyers often because they think, what does that mean? Can be a really effective tactic to get more buyers through the door. And remember, without viewings, you can't create a sale. And that's one thing that vendors are becoming more aware of now. And I think a lot of agents, having only been in the game, seen a bull market for years and years, don't know how to approach this new tougher market. And it's where experienced professionals that have been doing it for many years can make a huge difference and a huge impact versus their corporate competitors.
That is very true, Ken, because there are, like you say, a lot of agents that have only been trading. I say only 10 years in business is a long time, but 10 years in business, there hasn't really been a major challenge as far as the housing market's gone in the last 10 years until the last year.
Exactly. Yeah. And that changes things. It changes everything. Because frankly, if you overvalue every property that you see, you'll get them all on. But then you'll go back to the office and all your negotiators will be despondent because they won't be able to sell any of them. And then all they've got all day long is vendors calling in saying, any news, as the tumbleweed flows down the road, you know. And then all of a sudden you're in a situation where a new vendor comes in, speaks to one of the negotiators and says, how are you doing? Is it busy? No, we're dead. You know, whereas if they actually refuse those instructions that aren't going to sell because the pricing isn't right and just concentrated on people that are realistic and really want to move, then they'd have the confidence to know that there is still a market there. It might be at a different level, but there's always a market there. Two things are always apparent to me. There's always people out there that want to sell, and there's always people out there that want to buy. The question is only one of volume.
100% agree. Couldn't agree more.
Great. Okay. Well, thanks for joining us today, Nicola. It's been really valuable, I think. I think we'll probably get a few questions as well. And if we do, obviously, I'll pass them over to you. But I think it's been very revealing to find out what's going on in the mortgage market. And I hope we can catch up sometime soon and see where it goes in the next few months.
Definitely. Thank you so much for inviting me, Ken. I actually really enjoyed that chat. So, yeah, and I'll gladly come back anytime.
It's always a pleasure. Thanks, Nicola.
Take care. See you later.
Thank you for listening to the Property Buyers and Sellers podcast, everybody. We'll be back next week with another edition. Till then, look after yourselves, and if you can, your family and friends. Ciao.